Is Bitcoin a scam? Welcome to the first part of our four-part series, where we dive into the heated debate between crypto bears and bulls. In this episode, we'll explore the skeptical side of the crypto world, questioning the legitimacy of the Bitcoin and other digital currencies. Our guest, Clem Miller, a seasoned trader and Georgetown professor, will unravel the myths surrounding crypto, challenging the notion of Bitcoin as digital gold. Get ready for a thought-provoking discussion that sets the stage for the upcoming episodes, where we'll hear from both sides of the crypto world. Check those numbers. Let me know. But make sure you listen towards the end, where we talk about a phenomenon that I hadn't heard of until Clem enlightened us. So check out Main Street Meets Wall Street podcast with Clem Miller Part 1. Thanks.
Main Street. Welcome to another episode of Main Street Meets Wall Street. I'm here with Clem Miller, and we're here to talk about crypto. Why is this really a scam? Is this really anything? Is it digital gold? Clem's going to give us a reality check. Clem's just tell you a little bit about Clem. Clem's a retired trader. He's now a professor over at Georgetown. He's been a little skeptical of crypto since he maybe first heard about it. He's just going to hop on and let you know where he stands and, the pros and the cons of crypto, or maybe just the cons, but here goes. Thanks for coming.
Thank you so much, Marcus. I'm happy to be on the podcast today. Sounds like you're doing great with the podcast so far. So all the best luck for this. So, we're talking about Bitcoin crypto today. And as Marcus mentioned, I've been a big skeptic of this area for a long time. But that's primarily, I think, because I come from a background of looking at stocks and equities. And, when you look at stocks, for the most part, you're dealing with real companies that generate sales, that generate profits. Hopefully the companies you're investing in generate profits. Some of them would pay dividends to you every so often. These real companies, right? Real companies, real businesses. That's what I like to invest in. And crypto offers none of that. Crypto is not a company, right? It's not something that inherently generates revenue. It's not something that produces profits. It's not something that pays dividends. It is, ephemeral, to use a highfalutin word, right? It has an existence that is only electronic, right? Despite the marketing presentations which try to show it as a gold coin, that's kind of nonsense. And in reality, it's just sort of bits and bytes, right, on computer screens, and that's all it is that. So I want to talk about a few aspects of it. One of the problems with delving into crypto a lot and delving into the mechanics and the technical aspects of it is that it tends to give crypto a credence that I don't think it deserves. And so, with that sort of caveat, I'll mention a few specifics that go a little bit deeper than what I just said about why crypto is not great, why it's speculative. It's not really an investment asset. Crypto is being marketed, or has been marketed, in various ways to try to appeal to different audiences, right? So it has been variously described as, some kind of new technology, which it isn't. It's been also described as a commodity, which it isn't, right? It's also been described as a currency, which it isn't, right? It's none of those things, right? It's sui generis, as you would say in Latin, one of a kind. And, it's not the best kind of asset either, right? It's not a stock, as I mentioned. It's not a currency. It's not a commodity. It's none of those things. It has no tangible presence. And what's bizarre is that the crypto promoters, and using all this razzle dazzle terminology that they use, they'll essentially diss currency like the dollar and the euro and so on, and call them, quote, fiat currencies, as if, to say that they've got no value to them, right? And implying that Bitcoin is of much greater value than the so-called fiat currencies, using their terminology, when in reality, there couldn't be anything further from that situation, right? Currencies, regular currencies, let's call them what they are, regular currencies, real currencies, like the dollar and the euro and the yen and so on, are backed up by the full faith and credit of their respective issuing governments. And also, there's this element of, sort of power, geopolitical power underlying those currencies. So, the US dollar is not just, a printing machine, as the Bitcoin people will tell you it is, right? It doesn't just come out of a printing machine. The US dollar is backed by the treasury, by the revenue receipts, receipts from revenues. If you were to ask, the Trump people, they would say, oh, it's the tariffs, right? The tariffs are generating it. There's real revenues, right, that are coming in to support the dollar. And ultimately you've got the geopolitical power of the United States supporting the US dollar. If you look historically, take a longer term geohistorical lens on this, Marcus, you will see that, the US dollar replaced the pound sterling as the global sort of reference currency after World War I, and especially after World War II, because of the rising geopolitical power of the US relative to the declining geopolitical power of the pound sterling of the UK. And so so you can see that there was a geopolitical element. And in the past, there were similar points where currency use changed with geopolitical changes. So it's kind of, those who don't study history are not going to be aware that in the past, at times, the Spanish Thaler, Thaler, the Austrian currency, the French, the Dutch, all these were currencies that were used more globally, ultimately replaced by pound sterling and then by the US dollars. It's a function of geopolitics, and we'll see that, if China should come to the fore, and that's a whole different subject, Marcus, about China. But you might see a situation down the road where rising Chinese geopolitical influence might make their currency a more important currency in markets. But the Bitcoin, these bits and bytes on a computer screen, don't have any of that geopolitical substance to them, don't have any of that actual revenue support. There's none of that, right? So what's the real fiat, right? It's Bitcoin is the real fiat. It's not the so-called, it's not the real currencies that Bitcoin promoters describe as fiat. So that's kind of nonsense. Now, the Bitcoin promoters will come back and say, well, the value of Bitcoin is in the fact that, only so much can be issued, right? There's this limit, 21 million Bitcoin that can be issued over time, and they have this whole process of mining Bitcoin using computers doing crypto games. Not exactly mining, right? I mean, by using the term mining is misleading, right? Because you think of like gold being mined or copper being mined. It's not mining, right? It's computers using up a lot of energy and water, right, to solve puzzles. And once a puzzle is solved, it creates an extra link in the blockchain, and then and then whoever solves the puzzle gets a Bitcoin, right? I mean, that's kind of crazy, right? But the folks will say, the Bitcoin promoters will say, okay, well, you've got $21 million Bitcoin max volume, and as a result of that, you've got a scarce asset that should rise in value. Okay, now there are several problems with that. Of course, the promoters won't go into those problems, but there are several problems with that. First of all, first and most important of all is that the price of something depends not just on the supply, but on demand. And so when speculators rush out of Bitcoin, doesn't matter how many Bitcoin there are, when speculators rush out, the price is going to fall. So it's a function of both supply and demand. So the fact that supply is limited doesn't by itself predict that the price will go up. And that's what all the Bitcoin promoters are trying to pretend. As we reach our maximum limit of Bitcoin, the Bitcoin price will soar. That's what they say. It's nonsense because it depends on demand as well. And I forget who said this, I think some famous economist Not that we should always listen to economists, but they said supply, does not create its own demand, or supply creates its own. It doesn't. Supply does not create demand. You could have a supply of something and it doesn't create demand. You could have, huge supplies of various product, any kind of product, right? And unless there's demand, you're going to have just lots of inventory sitting around. The same thing could happen with, and could happen and has happened. If you look at the year to date on Bitcoin, it's down over 20%. And, anecdotally, there's been a lot of folks leaving Bitcoin, selling Bitcoin. So there you have a live example of demand diminishing for Bitcoin, even while the supply stays the same and the price goes down. It's, Bitcoin is not exempt from the laws of supply and demand. No asset, speculative or investment asset is exempt from that. So that's one issue with the whole notion that Bitcoin is somehow an attractive asset over the long term. But there's also another concept too as well, which is that there are alternatives to Bitcoin that your typical Bitcoin investor will, try to exploit as well. So there's
Okay, hold on before we jump into that.
Yeah.
That's going to be a deep one. You just unloaded a lot of good stuff to us, man. A lot of great information.
Yeah.
Like,
Well, we'll come back to the alternative thing.
Yeah, we're gonna come right back to the alternatives in just a minute. I just want to kind of unpack it for for people who might we just say a lot of interesting things. So when he's saying fiat money system or fiat system, he's referring to like money, dollars, paper. That's what people refer to as fiat. One big thing when you were mentioning that the U.S. became the backing for the global economy, the dollar. When it started, we were on the gold standard, right? So that's a whole different thing, right? We had gold to back the dollars before Nixon changed that in the 70s. So like every dollar was backed by hypothetically physical gold asset. And now just in your conversation, and I love how you're breaking down the cons.
Yeah.
I love how you're breaking down the cons in the conversation. It seems like someone could just replace the word gold with Bitcoin.
No, right. So, okay. So a couple of things there. First of all, between World War II, Bretton Woods, right after World War II, and 1973, when Nixon took the U.S. off the gold standard, indeed, gold was priced at $35 an ounce, right? But, the question then becomes, was it gold that was supporting the dollar? Or was it the fact that the U.S. was the most important, power in the world? I don't think it was gold. I think it was the fact that the U.S. had achieved global domination that made the dollar so important. The dollar, the dollar was used to help rebuild Europe, for example, right? Now, you had the Marshall Plan in the 70s when oil prices went up, and you had the Gulf states and others making a lot of dough off oil. Where did that money go? It went into dollars, right? Dollar assets, the so-called petrodollars, right? So the dollar is a dominant asset, was in up to 73 a dominant asset, not because of gold, but because of geopolitics. So and the role of the U.S. in the world. So I think that needs to be revisited. An interesting thing, this question of, well, is Bitcoin the new gold or whatnot? You mentioned that, right? First of all, gold is actually physically mined. It actually has a limited supply. It has been used for thousands of years as a store of value. Thousands of years, thousands and thousands, right? And Bitcoin is what? A couple of decades old, right? So I mean, it's kind of ridiculous, right? I mean, you think Bitcoin will be around in 100 years? No. Do you think Bitcoin will be around in 10 years? I don't, right? It's not an investment asset. It's speculative, right? So, which brings me around to, well, I want to mention one thing first, then I want to get back to the alternative discussion that I wanted to talk about. So, one way to think about crypto and to address this question of whether crypto is more solid than, what the crypto promoters call the fiat currencies, or what I call the real currencies, is this whole notion of stable coins. You've heard that term, Marcus, stable coins?
Yeah, the
So,
Genius Act.
yeah. So stable coins. The idea of a stable coin is you have a crypto token. Let's call them what they are. They're not coins, they're tokens, right? That's the real term, tokens. Like, some of you from New York may have heard the expression that in a token will get you on the subway. All right. I don't know if you so I think so with these stable coins, the idea of a stable coin is that it's basically linked to the dollar. Okay. So think about the contradiction involved in the concept of a stable coin. The people who promote stable coin are saying that our product is valuable because it's linked to the dollar. But crypto promoters in general are saying Bitcoin should replace the dollar because the dollar doesn't have value. So go figure, like who's right? Either you can be a Bitcoin promoter and say that the dollar is weak, Bitcoin is stronger, Bitcoin is digital gold, blah blah blah, or you can be a stable coin promoter and believe that the only reason your stable coin has value is because the dollar has value. So what is it, right? Pick a side. Do you pick the stable coin side or do you pick the Bitcoin side? You can't pick both because there's an inherent contradiction. So I'd mention that. Okay. And then let me come back to the alternative to Bitcoin question, right? So where I was going with that is that, Bitcoin, everybody talks about the value, all the promoters talk about the value of Bitcoin being in the fact that there's only a limited supply. And I already mentioned the fact that demand is a part of that equation too, not just supply. But also there are supplies of other things that your typical Bitcoin speculator might want to put their money in. And one of those would be various kinds of prediction markets and gaming and so on. And, a lot of folks speculate on prediction markets. They speculate on gaming, right? And, so Bitcoin is just another one of those games, so to speak, right? You you can have speculators, dump Bitcoin and decide they want to speculate on the Super Bowl, right? So, you got that as an alternative type of speculative instrument. Not to mention the fact that you've got, various kinds of meme stocks that are out there that people put their money into as well and try to speculate on those. And those also are alternatives to Bitcoin. And I also want to mention, in addition to that question of alternatives, that even within crypto space, there are alternatives to Bitcoin. We mentioned stable coins already, and there are other types of crypto tokens as well that are out there. Lots of different kinds, not just Bitcoin. So how do you measure the volume of the crypto tokens? How do you measure that volume? As other crypto tokens are issued by other kinds of crypto tokens are issued besides Bitcoin. How do you measure that supply? Do you measure it only as 21 million or do you measure it as the supply of all crypto? If you can dump Bitcoin and buy other crypto tokens, and I'm sure there are folks out there who speculate and say, well, I think Bitcoin's going to go down and I think, Ripple or whatever is going to go up, right? Then, what is the supply? How do you measure the supply? The supply is infinite, right? It's not 21 million. The supply is limited to only by the amount of crypto tokens that are being issued in general, not the 21 million. In general, all of the tokens, right? So you can't measure it by that. And then the last thing I'll mention on alternative instruments and the supply of Bitcoin is that there's a process known as forking, forking, right? And I can't, I don't pretend to understand the underlying computer logic for this, but currencies, tokens, crypto tokens, depending on their underlying technology, can fork, which means that they create replicas of themselves. So there was a forking episode, I think one, maybe there were more than one, involving Bitcoin itself, where Bitcoin spawned off a baby Bitcoin and created 21 million more tokens. So or you can look at it as kind of a clone, right, of the original Bitcoin. And right now, I can't remember what that Bitcoin is called. It's got a different name and it trades differently. It's at a price that's lower than the regular Bitcoin, than the parent Bitcoin. So, you could have And I have not seen any research about whether the forking diminished the value of the regular Bitcoin, but you have to believe that if you're spawning a baby Bitcoin, then it's got to affect the value of the parent, right? You got to, because it's creating additional supply. So one has to worry about forking episodes too, which would make the supply of Bitcoin larger, despite this initial concept of the 21 million Bitcoin.
Wow, that forking thing is very fascinating. Sound like it's just missing a couple of letters or changing for what might have really just happened to people who invested in that. Like just creating a totally different coin, like just cloning it is. I haven't heard of that one, so that's very
Yeah, look it
interesting.
up. Forking.
Yeah, no, don't worry. Yeah,
All of you listeners to Marcus, look it up. Forking, Forking, and I think you'll be shocked that this can actually happen.
yeah, that just brings me right into our next topic we can jump into maybe. So you're talking about like with Bitcoin, if you have gold, and I know we connected on LinkedIn. I saw how you would share your portfolio, which is very cool actually. You say you recently left gold, but say with that said, like gold or with stocks, and in general, we're talking about these coins, if you want to compare maybe somewhere where people think like, because there are so many tokens, Bitcoin would be like maybe a large cap stock, and these other ones are probably like small cap, micro, quantum computing, not on the earnings, but on the recognition level. Okay. So not on earnings, not on any intrinsic
Well,
value,
yeah,
just how people, because there's so many coins.
if you live in a crypto world, right? Then I guess you could say that some are large cap and some are small cap. But the whole idea of cap doesn't really. I know the crypto promoters talk about about coins having cap, and all that is the value of the coin times the number of coins, right? That's all that is. It has nothing to do with any kind of earnings at all, right? So
Right.
I mean, and I guess you could say that stocks are similar because you could have a company that has no earnings.
Growth.
You could have a company that has no revenues, and it can still have a market cap because it's based on future expectations of revenues and earnings. So you can have that, but at least it's based on something that is a real flow of revenue or earnings, even if it's expected in the future. Whereas Bitcoin and crypto tokens, the market cap is basically based entirely on the willingness of somebody to buy that token off you in the future.
See that, and that's the big part too, right? You teach in university, we learn in school, you learn that money, like when you talk about what money is really, or what something has value of. What makes something valuable is what something's willing to pay for, right? Like
Yeah.
if I was like, hey man, I'll pay you $1 million for those glasses on your face right now, like those glasses suddenly become much more valuable. Like you said, supply doesn't create demand. You have to have someone that wants to buy that widget that you're creating with the digital coins and the Bitcoin all in the same. I want to jump into the risk, right? Because that seems to be one of the big things we need to let Main Street know, the systematic risk versus like. So if I was to invest in a stock, right, this has been covered by the SEC, reviewed, maybe not recommended, because the SEC is not going to recommend your stock, but it's been reviewed. Regulators know it's publicly available information. This corporation has to report. And if something was to happen, there will be some way to get some recourse, right? Whereas if you lose a wallet or a token, there's not particularly any way that you can go back about it and find your wallet or your token. Someone could just find. I saw a statement where a guy was like, my dad just invested, I don't know, $200 in Bitcoin. I told him to send me his like key or whatever, and I stole it. And I told him that's your first lesson in crypto. Never share your wallet token. So just like, can you just expand on like, because I mean, you could have gold, but someone will have to break into your vault and take your gold. So you see, go deeper into the system at risk if you.
A couple of things I think about when just based on what you were talking about. So first of all, you mentioned about the regulation, right? And I think that's a very important thing. But again, there's kind of a myth that's come out of the crypto community about how crypto will really soar only if we have a proper regulatory framework. You may have heard of that, right? Crypto will soar if we get a good regulatory framework. Well, what the crypto promoters are really talking about is they want to have a quote, good housekeeping seal of approval for crypto so that they can keep selling it, right? So they can keep selling crypto and they can say, well, we have the government's approval for this. The government is blessing it. They will misconstrue some of these crypto promoters, the unsavory ones, will misconstrue what the government is actually doing with regulation and sort of spin that into a Well, this is actually a real kind of investment asset because we've got government regulation and everything. So trust us. And the crypto promoters, including the Witkoff and Trump, was it Witkoff? Yeah, Witkoff and Trump sons, right, have made inroads in trying to create this regulatory framework that provides this good housekeeping sealed approval. So if there were a solid regulatory framework around this, actually would not have crypto at all, right? Because it's not an investment.
Very interesting. Yeah, and the purist of what Bitcoin and crypto, they don't want the government intervention. It's more with the corporation strategy and Coinbase who are trying to get more into regulation. And just so yeah, you trade in equity. So I'm assuming you would never, and we're not recommending any equity on here, just so y'all know everyone's
Yeah.
individual personal investments, but like Strategy or Coinbase, you can see through their, let's talk about Strategy. You can see through their books, right? And Michael Saylor's always out here talking about how he'll just keep buying Bitcoin, keep buying Bitcoin. He says he can afford Bitcoin to go down to $8,000, which is, I don't know how his numbers work. I haven't dug into them. Right now, to mine a Bitcoin, it's about $67,000, I think is the numbers coming out just to get one. And we know Bitcoin's been trading below that level. It could trade above it, but it's been currently trading below it. So if someone was to say, okay, what would you look at in that company that would make you not invest in the company if he shows you all these things and all this leverage and all this leeway? Or you're just saying, I don't believe it. Because this is, if he goes out and he's just lying to the world like this is a publicly traded company and he could really get in trouble for it.
Well, I don't think he's lying to the world. I think it's very clear that he promotes Bitcoin, right? He's all over the place promoting Bitcoin, and I would never invest in his company because it is so dependent on the price of Bitcoin. So I would never invest in it. He's highly leveraged to Bitcoin. Why would I do that? I wouldn't want to do that. So Coinbase, is they. I believe they do trade some other things besides crypto, but they're mainly focused on crypto trading. And why would I want to invest in that? I mean, if I wanted to invest in an exchange, why wouldn't I invest in the CME or the CBOE or one of the real the
Commodities exchanges.
yeah, one of the real exchanges, right? And at times those are pretty good stocks, right? Because they make money regardless of where the of where the share price is because they're the trading platform for this, right?
Mhm.
So they make money and they're more solid. They've been around for longer. I don't know why I would want to invest in Coinbase when I can invest in real trading platforms, real exchanges. Just I don't get it. So I mean, you can tell that I'm a little bit on the, you might say I'm really conservative. I'm not conservative at all, right? I'm realistic. And when I look at some of these things, the Coinbase is it's so narrow and focused on such a risky asset that I wouldn't want to be involved in it.
Got you. Yeah. And like you said, you're not risk averse. You understand. You're just risk realistic. You know when you should have more risk on, more risk off. I
Right.
mentioned earlier that on your link.
So, and Marcus, it's not just Bitcoin that is something that I wouldn't do, or crypto is something I wouldn't do. I look at and I don't want to necessarily. I mean, you mentioned Michael Saylor and that, but there's another person who
Woods,
Kathy Woods, right?
Tom Lee.
Well, Tom Lee's more of a big strategist. Let's talk about, I mean, Kathy Woods runs funds that invest in crypto, but they also invest in a lot of newer startup technologies, like real technologies. Crypto's not a technology. In sort of real technologies, quantum and not to mention things like Tesla and so on. That's what she invests in. I wouldn't invest in her fund either. And the reason I wouldn't is because she's taking long run bets on a portfolio of companies that, many of which may not have any revenues or profits right now. And that's not something I would do. Right. I'm not averse to technology stocks. I invest in technology stocks all the time, but I wouldn't invest in something just because Kathy Woods is involved in it. Right. Uh, and what one thing that you see with Michael Saylor and you see with Kathy Woods is that they are sort of CNBC personalities, right? they're out there promoting things and they have a media platform for doing that. And then, you have to wonder, well, if they're out there doing that, their media platform, why, should I invest? Why wouldn't I want to invest in somebody who's more silently pursuing real investments and doesn't want to talk too much about what they do and how they make money? I would rather invest with those people, right, than with folks who are, you know, promoting themselves on TV all the time.
So that would say maybe you want to invest in Intel over Nvidia. Jensen Huang's out all
No,
over
no,
the
no, I'm
world.
not
Look,
saying
I'm saying like he's out
I
promoting
would
AI all
never
the time.
I would never invest in Intel. No, never.
As we wrap up this enlightening discussion with Clem Miller, it's clear that the world of crypto is as complex as it is controversial. Don't worry, we're not done yet. In part 2, Clem goes even deeper into his pros and cons of Bitcoin and crypto in general. Part 3, we're going to dive deeper and bring into a different perspective. Someone sees a bright future for Bitcoin. Yes, that's right. We're going to bring on a Bitcoin bull who sees the horizon as ready to go and the potential for digital assets that is unlimited. So stay tuned for more insights as the debate continues. Check out the Main Street Meets Wall Street podcast anywhere you can find podcasts. Marcus Sturman Sr. on YouTube, or find Clem or Marcus on LinkedIn. Thanks. Stay tuned for more insights and debates that will change your understanding and perhaps even change your perspective on the crypto landscape. Main Street, heart, Wall Street, smarts.